Happy Saturday, everyone. This is Tim Knight, Slope of Hope, and a little video update of the markets in general here. I went through my index charts this morning. Usually I look at a 10-year daily graph. Today I just fired up the all data, which goes back, in some cases, 110 years. Get a really big picture here. So I've got 21 items that I look at on a regular basis, and I'll just thumb through them now and comment a bit on some and not so much on others. Here's the NASDAQ Composite. We are kind of good news, bad news here. The bad news for the bears is that in spite of this very long trend line, the NASDAQ managed to get above it back in late March and has been above it ever since. The possibly good news for the bears, intriguing news certainly, is this very sharp ascending trend line, which it is threatening. Now, added to which, the NASDAQ was not able to get above this important double top set in May and June of '08, represented by this red horizontal line. And the really cool thing, and I see this in index after index, is that we are only maybe 1 or 2% away from breaking big time back to the March '09 bottom trend line. Were we to break this, it would not only break that trend line, but also get back under this very long-term trend line, both of which would be pretty cool. Now, if we started to tumble, how far would we fall? My most ambitious guess at this point would be down close to the February lows or so. There's a pretty big support here represented by the fib, but that's a very meaningful, like almost 20% drop. I don't think we're going to drop 20%, just be clear, in a week or two, but I do think that's how much risk is on the NASDAQ at this point. Here's the commodity index, also very high, as you can see on a long-term perspective. I mean, really none of these can you make a big bullish argument for it. China, I'm kind of losing interest in general. It's not really doing much of anything right now from that index's standpoint, so I've kind of not bothered with FXI or FXP lately. Here's the oil and gas index. Again, energies, with the exception of some refiners, I found the whole kind of USO / OIH world kind of uninteresting right now. It's not really bothering. Gold is rather intriguing. Those who read me regularly know that I was pretty bullish on GLD. I've actually shrugged off that trade because I'm, on the one hand, I can see with something becoming dislocated in the economy, gold shooting higher, but from a technical standpoint, it's very questionable what's going to happen next. So gold and oil, I guess I'm kind of shrugging my shoulders at right now. Now the next one up is the Dow 30, and this one is the one going back 110 years. This is without the drawn objects, and I would really challenge anyone to have bullish thoughts when looking at a chart like this. Even from this, greater than a century perspective, it's very evident how sharp and unrelenting the rise since last March has been. It, to me, looks like a utter house of cards. Let's zoom in closer on that. A number of items going on here. First of all, we almost perfectly touched, just peeked over it just a tiny, tiny bit, this 61.8% level on this Fibonacci. And we turned tail right away from that back on April 26. Here again, we have this sharply ascending trend line, which I think is terribly vulnerable. A even somewhat meaty down day on Monday. I mean, not even meaty, Lord, 67. Well, let's look at it closely here in real time. We're talking about 10,920. We closed at 11,000. We're talking about an 80 point. If we get more than an 80 point drop, that trend line is broken, and it's broken for the first time in 13 months, almost 14 months. That's big news. That to me would be big news. And here again, I think that in terms of vulnerability, it's, I don't know, it's tough to say. The rise has been so sharp, it's really hard to say, where is support. I'm not even going to making conjecture on that. Here is the mid cap. Showed this in a post earlier today. A lot of these start to seem the same. You get the same sharply ascending trend line. How sharp it is does vary a bit from index to index. The mid caps, I think, have been stronger than the Indu. High tech index, not that interesting a graph. Here's the NASDAQ 100. Here again, we see that the highs back in May and June of 08 were not overcome. We likewise on the 26th kind of flipped right around. And on this one, nothing really insightful to say except for that. OEX, same deal with that trend line. Oil index, as I said, Now the Russell has been absolutely on fire, even just over the past couple of months. I mean, in this year alone, I think it's up like 16% just since the beginning of the year. This has been a real hockey stick. And let me point this out. We broke the trend line on this one already. In fact, quite some time ago. We broke the trend line on this one back in January. Now, with ascending trend lines, you can keep climbing, broken trend line or not. So it's not like everything goes straight down when you break a trend line. But notice, very importantly, how this trend line has done a magnificent job of changing roles from support to resistance. Look at it. Just what can I say? That trend line has done a yeoman's job of dividing those lines. Now, again, it has continued to ascend, but it has been a very interesting line in the sand. This one, I'm a little more clear on if we had a fall, if we got a good hearty fall. I would look at this trend line here that I'm pointing out, which is bolding as I point at it, as an interesting bounce point, which would correlate rather nicely with this zone back in Jan-Feb, that area around 625 or so. So that's about the level I would look at there. This is very similar. This is the dollar SML, the small cap index, very, very similar to the Russell. The semiconductor index, not that interesting a graph to me. S&P, of course, always interesting. We've got these big Fibonacci fans going back for many, many decades. Zooming in close to here, we did a beautiful job getting up to the 61.8% retracement. And we've got our friend the trend line there, which is being threatened. The most cited drop zone for this, you hear again and again and again, is 1150. If you look at that level, the reason it's held in such import is because that was the former high back in January 19. That, to me, doesn't represent any kind of ungodly support zone. I'm really not sure how far this would fall. I would maybe get a little more ambitious and say perhaps down to this fib zone, the 50%, about 1120 or thereabouts, which is a good 65 points away. Transport's extremely huge run here. This got up to the 70, what is it, 70, well, this is drawn back asswards, but 70+% retracement. And interestingly, if you look at this Fibonacci fan line, it zoomed right back up to the underbelly of that. So a lot of nice drawn objects lining up to demark the top of that one. Utilities is kind of a snoozer. Once this loads, I'll just go right past it. You know, again, looks toppy, but nothing that I would really trade. VIX, I don't care too terribly much about. XAU, gold here again, I think could be in for a drop if assets across the board get really weak. Here's the security broker dealer index. I think the financial / brokers are perhaps in a world of hurt right here. And I'll close by saying that the one pocket of strength that I traded up until about a week ago was HXB, the home builders. If this very nice pattern is violated, 1833, I think even that one little bastion of bullishness, the party's over. 10 minutes is coming up. I'm going to end it here. Have a good weekend, and Monday's going to be really interesting. Bye.